Good
Can I
morning to
just try
all
to
those
see if my, yeah, proceed. Yeah.
Good morning to everyone. I, Shruti, pursuing Bachelor of Business Administration, take an immense pleasure to welcome an external guest lecture today. I welcome our Honorable Secretary Sir Dr. Gautam P. Wade. I I welcome our beloved Principal Ma'am Dr. M.K. Malati. I welcome our HOD BBA Department Dr. T. Vishalachi Ma'am. I welcome all the faculties and our dear students. A special welcome to our guest lecturer C.A. Divya Abhishek Ma'am. Welcome ma'am. Everything starts with the name of God. So let's join our hands for a prayer.
Yes. Good morning to one and all. I am Dr. Salakshi, Head Department of Business Administration, Guru Shri Shanti Vidya Jain College for Women. It is my immense pleasure to welcome our esteemed guest of honor, Dr. C. Divya Abhishek, BCom MBA, ACMA, FCA, ACS, LLB, Audit UK, Diploma in IFRS for the state level webinar entitled on Company Law, Empowerment and Mechanism is organized by the Department of BBA, Guru Shri Shanti Vidya Jain College for Women. Hearty welcome to you, madam. It's my great honor to extend a warm welcome to our Honorable Secretary Sir and our respected Principal Madam for this webinar. It is my duty to welcome our fellow faculty members and beloved students. Now it's time to introduce our renowned guest of honor for the day. I'm extremely delighted to take this opportunity to introduce our guest of honor, CA Divya Abhishek, BCom MBA, ACMA, FCA, ACS, LLB, Audit UK. Divya Abhishek is a practicing chartered accountant from Chennai. She is a Bachelor of Commerce from Madras University, an associate member of the Institute of Cost Accountant of India, associate member of the Institute of Company Secretaries of India, a fellow member of the Institute of Chartered Accountant of India. She is also a graduate in law. Divya is a consistent academic topper and secured the All India 46th rank in the CA examinations and All India 23rd rank in CS examinations. She has also secured All India 4th rank in International Taxation examinations conducted by CIOT UK. She has completed her diploma in IFRS with ACCA London. Divya has also completed her MBA and pursuing a doctorate. Divya Abhishek is passionate about women empowerment and is presently the Secretary of Women Empowerment Forum of India. She has spearheaded the Committee for Women Empowerment for Hindustan Chamber of Commerce. She is a prolific speaker and has addressed over 800 conferences organized by the corporate forums, professional bodies, Chamber of Commerce, universities, and colleges too. She is also the first secretary to the Honorary Council of Zambia in South India. She has co-authored a book on income tax, Ready Refresher, and has authored the technical guide on social stock exchanges for the Institute of Cost Accountants of India, both of which are used widely by the professionals of government officials alike. Divya holds many positions in corporate and professional forums. She is currently a member of the National Committee of Corporate Laws. She was also a nominated member for the Southern Region in Corporate Law and Allied Committees for 5 years between 2017 and 22. Divya was the president of the Inner Wheel of the Rotary Club of Madras, Next Gen for the year 2018-19, She is then elected as the treasurer for FICCI for the year 2019 and 2023. A passionate believer in education, Divya is a part of the advisory board of many colleges and plays a key role in updating students to the changing needs of the society and the employer. She is also a member of advisory committee for SSS and SSS Jain College and SDNB Vaishnav College. She is a visiting professor at University of Madras. Divya is an avid sportsman and is a district level badminton player. She is also plays table tennis and is a voracious reader. Thank you very much, madam, for accepting our invitation and gracing this session. Once again, I
Thank you,
welcome you
madam.
all and thank you all. Thank you.
Thank you, madam. It gives me great privilege and honor to be speaking in this college. Shruti, can I go ahead? Can I start the session?
Yes, yes.
Okay, great. Thank you, Visalachi madam, for the very humbling introduction. It's my privilege to be speaking and interacting with such bright minds. Hopefully, the next time I come to the college and also meet all the students. Let me quickly share the screen for to get started with the session for today. Yeah, is my screen visible to everybody?
Yes,
Yes, ma'am.
Okay. So I think all of you would have understood what Companies Act 2013 is. But why today's session is extremely critical is because even though over a period of time we have all learned different aspects of Companies Act, today how this Companies Act has been implemented by the MCA is a very with a very different lens. There's Companies Act 1956, and then it after more than 50 years an amendment came in the form of Companies Act 2013. But today, as we speak, as latest as probably 2017, MCA, that is the Ministry of Corporate Affairs, which is in charge of establishing this act in India and its regulatory aspects of it, has drilled down on implementations of the provision. What do I mean by this? Now, earlier there were several provisions in the act. Some companies followed, some companies did not follow, but there's no regulatory aspect which penalized the companies that did not follow. But today, friends, many instances, many cases have been coming up, whether in NCLT, Tribunal for Companies Act, NFRA, various regulatory authorities are drilling down on companies if there is even a small non compliance which is not adherent to the Companies Act 2013. Therefore, as students, it becomes extremely relevant for all of us to understand the different provisions of this act. In fact, I had also told HOD madam that let us keep this as an interactive session. I hope all of you have access to the chat box because over the course of the session, I'm going to ask you a lot of questions and we're going to interact together and understand this act together. Now, some of you might be wondering, and in another college, some students asked, Madam, this Companies Act came in 2013. Why are we still discussing it? Even today, if you open the newspaper, at least some provision of the Companies Act would have cropped up. And the reason is this, friends. As the times are changing, whether it is the pandemic, whether it's a regulatory environment or the business environment, multiple amendments are happening with this Companies Act. As we speak, this act came out in 2013, but almost every year after 2013, a new Companies Amendment Act has come, as you can see on the screen. Therefore, we have to be abreast with these provisions. It is no longer only a professional needs to know Companies Act. We can all sit back. Whether you are working in a company, whether you are starting a company, or whether you are a professional who are handling companies, you will need to be aware of what are these provisions, what are these amendments, why is it going to affect you and me. To give you a broad structure of how Companies Act is, there are about 470 sections. Now, the earlier Companies Act 1956 had about 658 sections. This has been reduced in the new act. 7 schedules. Earlier had 15 schedules. What are these schedules? You have the act. After that, you have something called as schedules. And it's split into 29 chapters. Now, you may think, wow, Companies Act 2013 is a little easier because there are lesser sections. That's where I want to stop your thought. Every time you want to understand Companies Act, you have to read the act along with the rules as released by the MCA and the notifications and circular. While Companies Act 2013 has lesser number of sections, you need to read it in cognizance with the rules, which are very, very lengthy and worded. So, as students, for those who are now interested after the session to learn about Companies Act, don't just download the act, but also download these rules to the act to understand the entire gamut of how it is functioning. So the first question, who is this applicable for? Now we have understood, you've given a broad overview of Companies Act. Who is it applicable? Is this Companies Act applicable for your college? Does anyone want to attempt and put it in the chat box, please? Shruti, can you update me if do students have access to the chat box? Okay.
Ma'am, actually, not everyone can access, but once I get the chat box, I'll let you know what is the question.
Yeah. So somebody has said no. So what the question you need to ask is when it comes to Companies Act 2013, one, it extends to the whole of India. Two, it is only applicable to companies which are incorporated under this act. What I mean by that is there is a specific format which MCA has given on which you need to apply in order to become a company. There are different kinds of companies which we'll go through, but for your understanding, for the question of who is this applicable to, it is only going to be applicable to companies which are registered. There can be businesses which do not have to register as a company. It can be a partnership firm, it can be a sole proprietor. For all those entities, Companies Act will not be applicable. So your first question to understand the applicability is to see whether it is incorporated as a company. The company can be insurance company, banking company, electricity company, government company, normal company. As long as the word company is there, it becomes applicable to this act. There are different kinds of company. Now, if I am one person, I want to start a company. In the 1956 Act, it was not possible. In the 2013 Act, this is a new concept which is called it as a one-person company. Second, I want more people to start my company. Then I can form something called as a private company. The third kind of company is called a public company, where you need a minimum of 7 people. Can someone quickly tell me what is the difference between this public company and a private company? You can use the chat box, please. To very typically put it, when it's a private company, it's called as a closely held company. A public company allows you and me to put money in. Now, all of us have seen Reliance, correct? We have all invested, bought 1 or 2 shares of Reliance. Automatically, it means that Reliance is a public company. So, how will we recognize? The Companies Act is mandated. In the event where you're a private company, the name, you can put whatever name you want of the company, but in the end, the words private limited should be there. So, automatically, when you read the company names, if there is a word private limited, it means it's a private company. You and me cannot just like that go buy shares of the company. All the other companies will just have the word limited. It can be anything. It can be Britannia Limited. It can be ITC Limited. All those are public companies, which means that anyone in the public can invest in the company, put money into the company. Then, of course, there is a government company, which means the central government, state government invest in those companies. At least 51% they invest and they become owners of the company. So when I say invest, friends, don't get overwhelmed. I'll explain all the concept threadbare since it's going to be a basics of Companies Act. There are 3 ways in which a company can be formed. The first and most common way is company limited by shares, which means when you start the company, say you determine I'm going to put 1,000 rupees to start this company. So the Companies Act mandate says when you put 1,000 rupees, you have to determine how many shares are there for 1,000 rupees. So you can either say it is going to be 10 rupees shares. So 1,000 rupees if I put in, there are 100 shares in the company. So that is automatically it means a company limited by shares, 100 shares, 10 rupees per share, total value of what you have invested is 1,000 rupees. There can be a scenario where, let's say, Shruti, she comes and says, Madam, I want to form the company with you, but right now I don't have so much money. So I can always tell her, don't worry. That same, you put 500 rupees and you put only 5 rupees per share. The balance 5 rupees you pay over a period of time. So Shruti has to, over a period of time, be liable to pay that extra 5 rupees into the company which she has not paid for yet. The second is companies limited by guarantee, which means these are usually non-profit companies where the people who come together, they commit and say, at all costs, whatever happens, I will put in 1 lakh into the company, I will put in 2 lakhs. So they give a guarantee that they'll put money into the company. The third aspect is unlimited company, which means there is no commitment. But whatever issues happen in the future, all the people who started the company will be liable to pay the due to the company. So naturally, the most people prefer the first option of limited by shares so that they have a specific limit. At all points, Shruti knows she has to only be paying the balance 5 rupees per share. Let's take a small example to actually understand the nature of a company. Now, a person Venkat, he only starts a company, 1000 rupees is put in, he holds 99% share because he thought, okay, I'm opening a private company, it's not a one person company. So he put his wife for the balance 0.1%. 990 rupees Venkat has put, 10 rupees his wife has put. This business is in the business of dealing with timber. Now, what Venkat has done immediately, because it is timber and it can anything can happen. Tomorrow floods can come, COVID can come, whatever reason the timber gets spoiled. He goes to the insurance company and says, please insure all my timber. Tomorrow if something happens, I want to ensure that I get a compensation for it. So he lends his name and says, you insure it in my name itself because anyway, I'm practically the owner of all these aspects. Insurance company gives a wonderful insurance policy in Venkat's name. Now, unfortunately, fire came. Then same Venkat goes to the insurance company and says, see, I have insured all the timber. So please give me my insurance compensation. I want you to tell me whether this insurance company will give Venkat the compensation or not. Please use the chat box. Shruti, you can understand from the students and update the chat box, please.
Sure, ma'am.
How many of you think, yes, the insurance company has to give their insurance compensation to Venkat?
Ma'am, can you just repeat the whole part? Like,
Okay. There is a owner of the company named Venkat. He owns all the shares of the company. Okay. Subsequently, the company is in the business of dealing timber. Venkat goes to the insurance company and says, tomorrow, if something happens to the timber, please give me compensation. It's a normal insurance that he is taking. Rightfully, the insurance company gives a policy in the name of Venkat. Okay, the owner of the company, practically, he only runs the company. Tomorrow there is fire, timber gets lost. Now Venkat goes to the insurance company and says, see, I already told you this. Fire has come now. All the timber is gone. My company is gone. Please give me insurance compensation. The question is, will the insurance company give the compensation, or do you think no, insurance company will deny the compensation? Has said yes. Okay, insurance company has to give the compensation. Anybody else?
no, ma'am, the insurance company will not give since it is seen clearly that Venkat already knew that there's going to be a fire accident. So it is not an accidental point.
Okay. So how we have to address this is, in this scenario, Venkat does not know. This is multiple years later this happened. It's a real life scenario. What we need to understand is, the insurance company can deny and say, you, Venkat, you took insurance in your name. But the company has the timber, company has lost the timber. You and company are not the same person. This is one of the most important features of what a company is. When a company is formed, let's say ABC Private Limited, we are forming together, everything that is there is in the property of the company. You can be a 99% owner in that company. That does not mean that you can take insurance policy in your name. If the company has to claim it, it has to be in the name of the company. So this is called a separate legal entity, which means that the company is a person of its own. So insurance company denied in this scenario and said, because you didn't take insurance policy in the name of your company, you cannot claim any compensation. It's a very, very important concept where even though as individuals you own most of the shares of the company, it cannot mean that you are running the company. In the eyes of law, it is a separate entity, and whatever happens in the entity, say you buy land, you buy property, it becomes the property of the company. You cannot take the property in your name. Which brings us to a very basic concept when it comes to companies, which is called shareholder and director. What is shareholder? Now, in the first example, when I said me and Shruti are starting a company, we are putting our hard earned money into the company. We are investors or shareholders. Investors in parlance, the law calls it as shareholders. Now, there's another aspect which says you put the money into the company and start the company, and somebody else is managing the company. Is that possible? The answer is yes. I can put the money in, I can employ two, three people, call them as directors and say, please take care of the everyday operations of this company. So they are called directors. Very, very important to know these two aspects. Third, I've told you that even though I start the company, I put in 90%, there can be a scenario where the company is a separate legal entity. So let's take a scenario the company is taking a loan. It is considered as a separate entity. Can I sign for the company? Answer is yes. Because the company is not a person, it is an artificial juristic person. But when I sign, I have to put the seal of the company, which automatically means that I'm signing on behalf of the company. So that is the concept of common seal. Tomorrow, I die. I've created a very good timber business and I die in whatever reason. In that scenario, will the company shut down? Anyone, yes or no? For whatever reason, I pass away. I'm only holding 99% shares of this company. Company is doing good business, it has good customers. But because of my death, should the company shut down? Can anyone answer me in the chat box, please? You can just say yes or no.
Ma'am, answered is no.
Why so?
Ma'am, if it is a partnered company, then another partnership, then other partner can take place on behalf of you.
Okay. So
If
that is
not, the
the
company
concept
can
of
be transferred according to your will.
so that is where we have to understand if it is a partnership firm, then what Shruti said is absolutely correct. In the case of a company, it does not matter who is coming in, who is taking a succession. It is called perpetual succession because it is a separate entity. So as long as the other directors are there, the business is going on, irrespective of anyone's demise, the business of the entity will continue. So whenever we think and talk about companies, what we must remember, friends, is that it is a separate person altogether. Can you transfer your shares? I have put in 1,000 rupees. I don't want to continue the business anymore. Can I transfer my shares? The answer is yes. Which is why it is the company will go on forever. Unless you go to MC and say, I want to wind up this company by process of law, only then the company will close. Otherwise, the minute a company started, it will continue and go on, irrespective of who's there, who's not there, and the eyes of law as long as it is compliant. So these are very, very important provisions to understand what is this company. Everybody says corporate company. What does it mean? These are very salient features that you should remember. One last aspect, which I think is very critical, is called liability. Now, let's take a scenario. I open a timber business, the company is doing extremely well. Suddenly, all the timber is gone on fire, correct? I go to the insurance company, they've denied my insurance. They've said that you've taken it in Divya's name, you should have taken it in company's name, so you get no insurance. All my customers are saying, where is the timber? You have given us the order, please supply it. But my timber is gone in fire. Now, in such a scenario, I'm not able to fulfill any orders of the company, correct? Can the customers come and say, okay, the company has no money, the company has no timber, Divya, on your word we have given these orders, so you need to now sell your house and give me the money for it for the cost of my order? Can they do that? Can anyone say yes or no? Okay, someone says yes. Okay. So, friends, that's why you should remember the concept of limited liability. Because we have said that the company is a separate legal entity, it is a separate person, you cannot go to the owner and say, you go sell your house. It is the owner's personal asset. Only to the extent of what is there in the company, everybody can recover. Which is why today, friends, whenever you see any large entity, they will not form as firm or own company. They'll form as a corporate entity, as a company under Companies Act, because they do not want to be held liable for their personal belongings in a future date if the company does not do well. This is a very, very important feature of companies where only to the extent of what is available in the company has bank balance, the company has some timber, the company has some asset, the people who are owed to can recover. Otherwise, they are at a loss. The people who invest in the company, the people or customers cannot recover more than what the company owns. The Companies Act has given out various new provisions, whether in the area of directorship, whether in the area of auditors. There's something called as corporate social responsibility, which all of you would have heard of. So, in today's session, I'll quickly highlight in the next 20 minutes what are these different provisions that all of us need to be cognizant of. Now, let's understand the concept of a director with the help of a first example. I'm sure all of you recognize the people on the screen. This is Gauri Khan and her husband Shah Rukh Khan. Naturally, very, very popular. Now, Shah Rukh Khan is an actor. His wife Gauri Khan said, I'm going to start a producer company. Producing. They produce movies. So they called it's called as Red Chillies Entertainment. I'm sure all of you would have heard of that. Now, Gauri Khan is a director. Now, I already explained the concept of shareholder and director. Shareholder is someone who puts the money in the company. Director is someone who does the everyday activity, executes the what the company needs to do. Now, we all know naturally by being husband and wife. In the evenings, Gauri Khan will tell Shah Rukh Khan what is happening. Shah Rukh Khan will tell her, do this, do that. Don't produce this movie, produce that movie. So, indirectly, Shah Rukh Khan is giving many tips to Gauri Khan to run the company, is it not? So, in this scenario, in the books of the company, Gauri Khan is a director. Will because Shah Rukh Khan is helping behind, because we all know it is happening because of his presence in the industry, can MCA come and say, Shah Rukh Khan, you are considered as a deemed director because you are actually doing all the activities of a director. Only in records you have not mentioned as director. Can they do that? Does anyone want to attempt in the chat box? The answer is in the Companies Act itself. Now, initially, in the previous Companies Act, they said that any board of directors in relation to a company means collective body of directors occupying the position, which means that in the before Companies Act 2013, when these kind of scenarios happen, automatically because Shah Rukh Khan is helping in the background, he can be considered as a director of the company. Now I'll tell you over the course why it is such a big deal to be considered or as a director or not, because it's a huge responsibility that is undertaken. The second scenario, Companies Act 2013 very clearly defines directors to be appointed to the board of the company, which means unless in paper someone is appointed as a director of the company, you cannot be considered as a director in the company. So therefore, in this scenario, Shah Rukh Khan cannot be considered just because even though he's doing the activities of a director, he will not be considered as a director of a company. Now, naturally, there are several. Just 1 minute. I think it went to the. I apologize. Yeah. So naturally, who is a director? Why is it so important whether or not Shah Rukh Khan is a director or not? The reason is because it can. Let me
Excuse
just
me,
share my
ma'am.
screen. Yeah, I'll just share my screen.
Yeah.
Can you see it now? Yeah. So directors are people who are in charge of the management of the business of a company. They have to ensure that whatever purpose the company is formed, those objectives are satisfied. Companies Act 2013 has come one step ahead and said every company should mandatorily have something called as a resident director. What it means is earlier there were no such provisions. So anybody, somebody from US, somebody from Australia will start a company, there'll be directors. Suddenly, if some issue happens in India, the government will not know who to go ask because they'll be outside India unreachable. So the Companies Act 13 has said there should be at least one person who is in India, and that is called as a resident director. Now, there are different kinds of directorships which we'll quickly rush through. But the criteria is if you are a private company, there should be a minimum of two directors. If you are a public company, there should be a minimum of three directors. And if you are a one-person company, there should be a minimum of one director. The reason is because at all points of time, in the records, there should be two people at the minimum as directors working through the operations of the company. Now, let's take a scenario. In the event where this two directors suddenly becomes one, for whatever reason, one director doesn't want to continue, or one director has a demise and is not part of company, automatically the company has to wind up. The provisions are very, very stringent. In the event where you do not satisfy these criteria, you cannot continue the operations of the company. For per person also, if you are a director in a company, maximum directorships you can hold is only up to 20. The reason is it was felt that when you take directorship, you have to ensure that you're actually having enough time to work towards the welfare of the company, and thus such limits are done. How are these directors appointed? Now, when you start the company, you can name people at the memorandum. It is called Memorandum of Association. Those people are considered as first directors. Subsequently, the company can choose and say, I want more directors. There are only two directors. I want to appoint two more because the company has so much operation. In such a scenario, the shareholders, that is, the people who are investing in the company, can appoint directors into the board of directors. In certain special scenarios, the board itself, what do you mean by board? Those two directors together form a board of directors. The board of directors also can appoint additional directors. Now, all these are operational efficiencies that have been brought into the act. Now, somebody asked me a very interesting question, Madam. The shareholders can appoint, the board of directors can appoint. Now, what if I'm someone, I want to be director of a company, I feel I'm qualified, I have the eligibility. How can I become the director? Because I don't know who's the shareholder, I don't know Shruti Divya, I don't know the directors who are there. There is one option that the act says where, in the event where you or I want to become directors of a company, they have a specific provision where you can go apply to the company. You can give a notice with your profile. There's a minimum deposit of 1 lakh that needs to be made. The caveat here is, in fact, it reminds me of a small scenario where in an office there were two junior staff, Venkat and Sriram. Suddenly at about lunchtime, Venkat got a call and he said, is Sriram there? Venkat says, yes, yes, sir. He said, please tell Sriram that his cat was playing on the roof, fell down and died. Immediately, Venkat turned to Sriram and said, your cat fell down from the roof and died. Now, Sriram was very shocked. He was very close to his cat. He burst out in tears and ran from the office. Now, all this, the senior in the office was watching. He's a very wise man. He came and said, Venkat, you should, whenever there is a bad news, you should first say, I got a call from your house. Apparently, your cat has gone up to the roof. After 2 3 hours, you say, your cat is playing. Your mother just told me. Then in the evening, you should say, your cat was playing, it fell down from the roof. They're rushing it to the hospital. And very, very gently, after some time, you should break the news saying, your cat didn't make it. It passed away in the hospital. So Venkat said, correct, sir, because Sriram was very upset. I'll henceforth do that. Now, the next day only, Venkat was there. The senior man was also there. They got another call. Venkat put the phone down. He was very shocked after the call. So the senior asked, what happened? Who called? He said, no, no, sir, nothing. He said, no, no, Venkat, tell me who called. Did we do any mistake? Did income tax call? He said, no, sir, nothing, nothing. Then the wise man said, Venkat, I've taught you so many things. I'm your senior in office. You have to tell me what happened. Then Venkat said, sir, apparently your mother has gone up to the roof. So please remember, friends, just because I'm saying that anybody can be a director in a company, don't go today and apply. You should have the credibility. Because the caveat here is you have to deposit 1 lakh in order to give in your application, and it will take to vote. That is, they'll take it to the vote in the meeting, and at least 25% favorable votes you have to get. If you do not get that, then that 1 lakh does not get refunded to you. So this provision is for people who are qualified, who have the eligibility, who have the experience of becoming directors in the company. As soon as you become a director in a company, the first step is for you to get something called as a director identification number. Now, this is a very, very important process. Why I am emphasizing this director identification number was there in existence for the past 100 years. But till Companies Act 1956, nobody bothered it too seriously. Whether you have direct identification or not, you can continue. But today, in 2017, what the government did, whoever did not have a valid director identification number was disqualified from being the director. There were severe penalties, many issues. So, today, friends, if you have to become a director of a company, you're in charge of executing the operations. So, the government is very insistent that you need to have a valid director identification number, and every year you need to do something called as a KYC. Now, for you to open a bank account, you do something called as a know your customer. So, similarly, in this also, you need to do a DIR KYC every year for your director identification number to be valid. Now, many kinds of directors are there. Today, I'm just going to touch upon one small aspect, which is going to be independent director. The reason why it is extremely important to understand an independent director, because it is a new provision. In my view, many opportunities have opened up. So, if does independent director apply to all companies? The answer is no. It was felt that such stringent provision should first apply to large companies. So, if you are a listed company, that is, you have put your shares in the stock exchange, or if you are a public company with paid up capital of more than 10 crores, that 1,000 rupees that I put in, if that same amount is 10 crores, then that is called paid up capital, or you make sales of 100 crores, or you have loans of 50 crores. If any of these criteria are satisfied, you mandatorily need to have someone called as an independent director. I'm sure all of you recognize this symbol on the screen. Today, Disney is one of the largest MNCs, having its pockets everywhere in the world. But what if I were to tell you, 10 years back, this company was on the brink of collapse. Now, what happened in Walt Disney case was, it was started by a family. Subsequently, on the demise of the owner, the sons took up the company. And what they did was they appointed directors who are all very close friends. Now, one was a teacher of the son, pre KG, the teacher taught, one was a relative, one was a cousin. So, and this was a public company which had money of the public for running its enterprise, correct? So, when all these relatives, teachers who did not have any experience of running a company before took over Walt Disney to run it, they did a lot of mistakes because they have no experience. They have just come into the company as a director because they know the owner of the company. So it went into so much misfluence that went to a brink of collapse. Therefore, it arose the importance of requirement of an independent director. To very quickly put it, an independent director is someone who is not related to the board of directors. He has his own qualification, knowledge, integrity, and experience. And the Companies Act gives a very, very specific definition of who an independent director is. So every company that is a large company which has public funds, which goes through those three criteria I told you, mandatorily has to appoint someone called as an independent director. And if you see the first line, a director other than managing whole time or nominee director. What does that mean? Let us take a very small example. Now there is a bank who has given a 20 lakh loan to a public company. Now, because it has given such a big loan, it can appoint one term of the loan agreement is one person from my bank has to be a part of your company because I want to ensure that the loan I've given you has been spent for what you have promised. So the company allows it. So this XYZ bank which has given the loan appoints say Mr. S as a director. It is called a nominee director. What is nominee? I'm nominating someone as a director on the board of the company because I want to ensure that the money I have given to your company as a loan has been spent correctly. Now, can this person, now naturally, we all know that this S is not related to the director of the company. He is coming from the bank as a nominee director. Will he be considered as an independent director? Now, this is where the definition is extremely important, which is why all of us need to learn the provisions of the Act. The Act very clearly says a director other than managing whole time or nominee director. So, this person cannot be considered as an independent director because a nominee director or a managing director or a whole time director cannot be considered as an independent director. Now, friends, what you need to remember is in 1 hour, it is very difficult to concise the provisions. But I encourage you to go see the Companies Act to understand that there are about 14 definitions given for independent director as to who can be considered as an independent director in the board of the company. You cannot be related, which means if you take Amitabh Bachchan's family, all of those you see, his daughter-in-law, son-in-law, his daughter, mother, father, cannot be considered as an independent director. The reason is because what happened to Walt Disney when all relatives ran the company without anyone to appoint to, it became a huge issue. So there are certain ways in which you need to appoint only for 5 years. Now, for those, this is a very good opportunity, especially for college students. If you want to be enrolled as an independent director in a company, you need to first clear a very simple exam. Then it is there in the independent director database where whatever you actually study in college will be the kind of questions that is coming there. I encourage all of you to go to this IICA data bank today. Explore. You only need a PAN number to register. Try and write the exam so that whichever in the future after 20, 30 years, if you want to become independent director of company, at that point you don't have to study and write this exam. Any number of attempts you can take. There's a 5,000 rupees entrance fee for it. It is a very good exam for you to consider. Now, why this entire concept of director is extremely important is the Companies Act has come out and said the event where the company does any mistake, it is not being managed properly, the liability will first fall on the directors of the company because the directors are the people who are running the company. Now, you might have employees, anything, but if any question comes tomorrow, the first question will go to the directors of the company. There are certain powers that are given to the director, certain restrictions on what they can do, cannot do. Why are these restrictions given? Now, suddenly I am running the company. I decide to sell the entire company building for whatever reason. Can that be allowed? The answer is no, because there is a shareholder. Divya and Shruti have put in that 1,000 rupees. So, without asking the shareholder permission, some actions the directors cannot just like that do. So, as you can tell, there is shareholders, there is an independent director, there are board of directors. These are the three layers who are forming the top management of the company for running the company. One aspect I want to cover before we move on to the next session quickly is in the event where, let's take a scenario, the company is going properly. End of the year, every company has to submit this balance sheet. It is called in the form of an annual return to the MCA. In the event where a company is not submitting this balance sheet for a period of 3 years, then all the directors of that company are disqualified, which means they cannot assume any directorship position. They have no power in the company or in any other company. The reason why MCA has brought this out is if a company is not able to submit what it has done for the year in the form of balance sheet, there is some issue that is happening, which automatically means the directors of the company are not running it correctly. So, very, very stringent provisions are disqualifying the directors. Multiple times I've told you, as a director, you have heavy responsibility. The company has to be run properly. They can put penalty on each director up to rupees 5 lakh. If very, very serious issues are coming up to 10 to 25 crores can fine and penalty can arise. So just like that, a person cannot be a director of company without knowing the provisions of the act. You cannot accept the directorship of a company because one, your responsibility is extremely high. The penal consequences of non-performance is also very, very high. I'm sure all of you went through the Satyam scandal. This was one of the four bringers of the Companies Act 2013 itself. Now we all know what happened in Satyam. It was a lot of issues. where at one time it was a crown jewel of India. But after a few years, it was noticed that they had more than 500 bogus employees. They created employees, they inflated revenues, they did multiple frauds. In fact, Ramlinga Raju said that beyond a point, it was like riding a tiger, not knowing how to get off without being eaten, correct? Because they've made so many issues. So if you go to the basics of why these issues came about, it was because again it came to the corporate governance. What is corporate governance? The people who are managing the company are not doing the right things. They did not have any concept of independent director. There's no issue of any third party looking at it. Ramalinga Raju's own sons and family were part of the board, everybody. So whatever the owner is saying was being done. So this is, in fact, this was one of the aspects why Companies Act 2013 came about. And very, very critical, last 10 minutes I will take to quickly talk to you about corporate social responsibility. In fact, India is one of the first countries to mandate this. To very simply say, what is corporate social responsibility? I'm sure all of you know the basics. What is corporate governance? Why there should be an outsider? What is corporate social responsibility? Giving back to the society in your own form. But to quickly tell you an actual Companies Act parlance, if you are a company who's making profit of more than 5 crores, or you have sales of more than 1000 crore, or your capital worth is more than 500 crores. So as you can see, it is for a little large companies, then it is mandated that at least 2% of whatever profit you make, the last 3 years average profit, you have to give it to CSR. What is CSR? To very quickly tell you, in any of these aspects, whether it is for poverty, whether it is for projects, whether it's for education, women empowerment, gender equality, in any of these things, the company has to spend money to ensure that they're compliant with CSR. So let me take a scenario, friends. My company this year has crossed this. Next year, Corona hit. I did not satisfy any of these conditions. Do I still need to comply with the provisions of CSR? A very important amendment came in 2022. Now, earlier, before this amendment, the minute CSR becomes applicable to you, whether or not you are satisfying any of these conditions, you have to still contribute. But in September, the government said, okay, companies are finding it difficult. So every year you check whether it is applicable or not. Just because one year it is applicable, it will not always be applicable. Now you've seen all these buckets of how a company can give into CSR. The act has defined and said everything can be considered as CSR as long as it is not something in the normal course of business. What does it mean? I am a timber company. If I distribute my timber to everybody, that is not CSR because that is what I'm doing for my business. So I need to contribute in some other form. Let's take a simple example. Now we all know Maggie noodles. We have all had Maggie noodles. What Maggie noodles saying? Don't worry, I will start distributing Maggie packets to everybody. I'm eradicating hunger. So please consider this as my CSR. Will it be considered as CSR? Let's take a second scenario. That same Maggie noodle says, okay, I don't want to distribute my packets. I am selling one Maggie packet for 10 rupees. What I promise to do, out of 10 rupees, 9 rupees I will take to company. 1 rupee I'll give it for education of a girl child. Consider that as CSR. How many of you think, yes, both of this is CSR? I see a lot of people now, responding on the chat box. Thank you. Just say yes or no. What you see on the screen, will this be considered as corporate social responsibility? Anyone? Somebody is saying yes. Okay. Anybody else? Friends, please remember, this is where before I touch upon whether contribution in kind can be considered as CSR, let me tell you a quick example. Now, an auto driver and a priest died and went to heaven. On the doors of heaven, God said, priest, I'm very happy with your service. For the last 60 years that you were there on earth, you are preaching my name, spreading good values. So I'm going to give you a 1 bedroom flat in heaven. Please have a good time. He said, just go on with the next person. The auto driver came next. God said, Auto driver, I'm extremely unhappy with you. You are a drunkard. Last 40 years, not only did you put your life at risk, but also the people who came with you in the auto, their life was also put at risk. I'm very, very unhappy. Here, take a 6 bedroom bungalow with a swimming pool and attached bathroom. Now, hearing this, the priest was very shocked. He said, My lord, what is this? I preach your name, but you're giving him a bigger house than me. Then God said, please remember, efforts are very important. But what is more important is the result. While you were preaching, everybody was sleeping. While he was driving, everybody was praying. So similarly, friends, this corporate social responsibility effort is important. What Maggie did, that effort was very important. But CSR very clearly says you have to spend, which means you cannot just distribute food and think that is CSR. You have to give money in order for it to be considered as CSR. For someone who said the second case can be considered as CSR, unfortunately, the government says no. That 1 rupee is only a CSR policy. How do I know that you are actually giving? So you cannot consider all this as a CSR. You need to monetarily spend it. Let's take a third scenario. CSR becomes applicable for the company. The company says, okay, I don't have money to spend. Government is saying I can't give my Maggie packets. I'll take a loan from the bank and I'll use that loan to spend for CSR. Can this be considered CSR? Answer is yes. The government is not worried how you are getting the money. As long as you're putting in the money into those buckets that we have spoken of, it will be considered as a CSR. Now let's take another example. Now all these are real examples that happen. Now, I know all of you would have used at least one brand that we see on the screen. All of it belongs to a company called Hindustan Unilever Limited. Now, Hindustan Unilever is a very large company. CSR is applicable. So, what Hindustan did was it went to all the rural villages in the adjoining districts and it imparted good hygiene practices. It told people how they should live hygienically and gave demonstrations. Can this be considered CSR? It falls within the bucket of CSR to impart education in rural villages. Will this be considered as a CSR or not? You can use the chat box, please. Someone has said no. Anybody else? So, friends, while it falls within the bucket of CSR, what we need to remember is what HUL did. It used ponds, it used Lux, it used Lifebuoy and demonstrated it to the villages, which means it was indirectly promoting its products to the large public. Therefore, the government said you are not doing CSR, you are trying to promote your business. You are using it for demonstration, which means if people like it, they'll buy more of your products. Therefore, it is not CSR. So, what we need to remember is every time we look at the provisions of CSR, whether it is actually the spirit of it is towards the CSR of the company, it has to fall within any of these buckets. Now, let's take that eradication of poverty and hunger. I'm a big company. Today is my birthday. So I go out, I distribute 3,000 food packets. And then I say it comes within eradicating of extreme poverty and hunger. Whatever amount I've spent to distribute these packets, I will take it as my CSR contribution. How many of you agree with it? Now, someone has said yes. So please remember, very commonly people assume that distribution of food packets will eradicate hunger and poverty. If you distribute throughout the year, maybe it will eradicate. On your birthday, such one-time events will not be considered as a CSR activity. Buying mask for employee, will it be considered as CSR? The answer is no. You are doing it for your own employees. Whatever you do for your own employees will not come within the ambit of CSR activity. Now, erstwhile friends, this is one area that you'll see very often in the newspaper. Erstwhile, when the act first brought about this provision, they said, you spend. For whatever reason you're not able to spend the CSR, don't worry, just write in your balance sheet why you're not spending. Now, what the government noticed, everybody, they put money aside, but they didn't have the heart to spend it. So now they've said you can no longer do that. Supposing if you are not able to spend money, you cannot just write in balance sheet, I could not spend for, I've kept it aside for so reason. If you're not able to spend within the 6 months from that year, you need to transfer to a government fund, to any of these funds that you see on the screen. Therefore, we can assume that the provisions of CSR become mandatory provision. If someone is not able to spend within that period of time, then they have to give it to the fund of the government. The reason where if you do not comply with any of what you said, up to 1 crore, the penalty can come. By officers in default, I mean the directors of the company can be held liable up to 2 lakhs. So I wanted to stick to the time given and briefly cover the provisions of CSR and various important aspects of the Companies Act. Thank you so much for everybody who have been very active on the chat box. I'm very happy to see that. Hi, Anjali, Pooja, Aarti, Deepika. A lot of you have said, hopefully, I meet all of you in person soon. Thank you to the college for giving me this opportunity. I think we have 4 more minutes. If any of you have any questions, you can type it on the chat box. If you have any questions afterwards, you can reach out to me. My number is on the screen. Please feel free to get in touch. Thank you, ma'am. Thank you, Visalachi, ma'am, for giving me the opportunity. Thank you, Shruti, for coordinating this session. It was wonderful to interact and speak to all of you. Does anybody have any questions?
Ma'am, one of them have asked that any CR audit that is carried out to validate the eligibility.
Yes. So end of the year, in the event where the auditors, as auditors of the company, we have to comment on it. Supposing if a company is not done CSR or has not been complained, the auditor has to mention it in their report and qualify the report. It's been taken very, very seriously. A lot of good mornings. Thank you, Vinita, Jaina, Ekta, Disha. Very, very nice interacting with all of you. Does anyone have any other questions?
I guess that's it, ma'am. So we'll
Okay,
wind up.
great. Yeah. Thank you, Nisha. Shall we? I'll stop sharing the screen here. If you anybody has anything, please reach out to me anytime. Thank you so much.
What a great session it was. All the companies and amendments just retrieved in our mind. Thank you so much, ma'am. Nothing is good than being kind and giving thankingness to others. I would like to thank our chief guest, CA Divya Abhishek ma'am, to have an overwhelming and informative session with us. I would like to thank our management who have given us this esteemed opportunity to conduct such a webinar. I would like to thank our Honorable Secretary, Sir Dr. Gautam P. Vaid. I would like to thank our Principal Ma'am for this great session opportunity. Thank you, ma'am. I would like to thank our HOD Ma'am who has coordinated with us in such a great session. Lastly, I would like to thank all the teachers and students who have been an active participation in this such a great session for us and coordinating so truly.
Thank you very much, ma'am. Thank you all.
We would end the session by national anthem. I request everyone to raise for the national anthem.
पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उज्जल जगति तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगल दायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you, ma'am.
Thank you.